Hello everyone, good morning. Today we are here together with a video lesson on class 12 business studies. The chapter is planning, chapter number 4, and today we will discuss almost the end topics of the chapter, and the topics are process of planning or steps of planning. There are 7 steps of planning process, and we will learn all the steps each in details, and then we will learn one more topic from the chapter, and this is the last topic. The topic is types of plan. Under types of plan, we will get 2 types of basic plan, that is single use plan and standing plan. And this single use plan and standing plans will be subcategorized into various types of plan. That also we will discuss in details. So for the discussion, now let's follow the video. In today's lesson, we will learn about the topics on planning process and types of plans. Types of plans are further categorized into subsections that also we will discuss in details. While discussing about the planning process, we can see that there are 7 steps of the planning process, and the steps are as follows. For number 1, we have setting objective. Number 2, developing premises. Number 3, identifying alternative course of action. Number 4, evaluating alternative course of action. Number 5, selecting an alternative. Number 6, that is implementing the plan. And number 7 is follow-up action. Now, in details we will study how these steps are followed and planning process is successfully achieved. Since planning is an activity, there are certain logical steps each manager has to follow while conducting the planning process, and let's follow the steps of planning one after the another. For first one, we have setting objectives. The first and foremost step is setting objectives for the planning procedure. That means every organization must have certain objectives. Objectives may be set up for the entire organization or for the department. Objectives or goals specify what organization wants to achieve, and on the basis of this objective, course of action are required to be developed. Objectives should be stated clearly for all the departments because they will give the direction for all the employees and the laborers how to work. For an example, increase the sale by 20%, which could be the objective of the entire organization, and this entire objective at the same time must contribute the ideas for the managers to participate in setting the process. The second step of planning process is developing premises. Planning is concerned with the future which is uncertain, and every planner is using conjure what might happen in future. Therefore, the manager is required to make certain assumptions about the future. These assumptions are called premises. The base material may be in the form of forecast, existing plans, or any past information about the policies. The premises or assumption must be same for all, and there should be total agreement on them by all the managers and the workers involved in planning. For example, forecasting is important in developing premises as it is a technique of gathering information. Thus, forecast can be made about the demand of a particular product, policy change, interest rates, price of capital good, tax rate, etc. Accurate forecast therefore becomes essential for successful plans. The third step in planning process is identifying alternative course of action. Once the objectives are set, assumptions are made, then the next step is to act upon the planning or the objectives. There may be many ways to act and achieve the objectives. All the alternative courses of the action that will result in successful achieving of the objectives should be identified, and an innovative course may be adopted by involving more people and sharing the ideas. If the project is important, then many alternatives can be generated and thoroughly discussed amongst the members of the organization, so that out of this alternative only the best one is selected. For selecting the best one, we need to follow the step number 4, that is evaluation of alternative courses. In this step, weightage, that is the pros and cons, advantage or disadvantage of each alternative is judged. Each course will have a variable which may be weighted against each other. The positive and negative aspect of each alternative are evaluated in the light of the objective. For example, the risk return trade-off is very common in financial plan. The more risky the investment, the higher the return is likely to give. To evaluate such proposal, detailed calculation of earnings, earning per share, interest, tax, dividends are taken and made decisions. Alternatives are judged in the light of the feasibility and consequences. The fifth step of planning process is selecting an alternative. In the real point of decision making, the best plan has to be adopted and implemented. The ideal plan, of course, would be the most feasible, profitable, and with least negative aspects. Most plans may not always be subjected to mathematical analysis. In such cases, subjectivity and the manager's experience, judgment, and at times expectation or intuition plays the important role in selecting the most viable alternative or most useful alternative. The manager applies permutations and combinations to select the best alternative course of action. The next step in planning process is implementing the plan. This is the step where the other managerial functions also come into the enlightenment or focus. The step is concerned with putting the plan into action. That means doing whatever is required. For example, if there is a plan to increase the production, then more labor, more machinery will be required. This step would also involve organizing for labor and purchase of machinery. The next and the last step of the planning process is follow-up action. This is where it is required to see whether the plans being implemented and activities that are performed are according to the schedule or not, and also whether the activities are the part of the planning process or not. Basically, this is the monitoring of the plan, where if the plan is diverted will result in failure of the business, and if the objectives are to be achieved, successful monitoring with the controlling requires to be performed. For the next topic in today's lesson, we will study about types of plans. Plans are generally of two types, that is single use plans and the standing plans. Under these single use plans and standing plans, more categories of plans are there that we will discuss one by one. But before that, we need to discuss about single plans. What are these plans? These plans are used only once. They are designed to meet the demand of the situation. That means as per the situation, these plans will work. And as the situation is over, these plans are not used in the business organization anymore. For examples, they can be method, they can be program, they can be budget. For example, also we can say that for a financial year, a budget is done. For the next financial year, that budget cannot be utilized. So a new budget has to be formed. Same goes for the program or the method. A method will be used in a certain situation to deal with the objectives achievement, and that method may not apply in some other situation. The second basic type of plans are standing plans. These standing plans are used again and again in the business organization, and they are recurring in nature. This basically serves as the guideline or the criteria for better functioning of the organization. They can be objectives, they can be the policy, they can be the rules and regulations, strategy, procedure. Now, for example, if I discuss about rule, the rule will remain same for each and every individual in the organization. That means they are applied in the business organization again and again. Procedure will be the same for the all individuals working in the business organization. Policy also will be same for all the individuals and for each and every day. So this type of plans are recurring in nature and can be used in business on every day basis or daily basis. The other categories of plans are objectives. So now we will discuss about objectives. The first step of planning is setting objectives. Objectives therefore can be said to be the desired future position that the management would like to achieve. Objectives are very basic to the organization, and they are defined as the ends which management seeks to achieve by its activities or operations. Therefore, an objective simply stated is what you would like to achieve as a end result. Now here an example is given, as you can see in the picture. For example, increase in profit by 10% or 20%. These objectives are usually set by the top level of management by the organization. Objectives should be very simple and they should guide the overall business planning, and this objective should be measurable in terms of quantitative in the form of a written statement of desired results within a given period of time. For the next category of plan, we have strategy. A strategy provides the broad contours of an organization's business. It also refers to the future decisions defining the organization's direction and scope in the long run. Thus, we can say that strategy is a comprehensive plan for accomplishing an organization's objectives. It refers to the future decisions defining the organization's direction and scope in the long run. Now we can say that this have three dimensions: determining long-term objectives, adopting a particular course of action, and allocating resources necessary to achieve these objectives. For example, if we say that pricing strategy, choose of advertising media, this acts as a strategy. A company's marketing strategy has to address certain questions: who are the customer, what is the demand of the product, which channel of distribution is to be used, what is the pricing policy, how do the advertisement of the product is done. This all comes under the strategy. Major strategic decisions include decisions like whether the organization will continue to be in the same line of business, whether new line of activity has to be introduced in the existing business, or to seek a dominant position in the market or not. Strategies usually take the course of forming the organization's identity in business environment. The subcategories of the standing plan is policy. Policy defines the broad parameters within which a manager may function or do his work. The manager may use his discretion to interpret and apply a policy. Thus, we can say policy are general statements that guide the thinking or channelize energies towards a particular direction. Policies provide a basis of interpreting strategy, which is usually stated in general terms. They are the guides to the managerial action and decisions in implementation of a strategy. If there is an established policy, it becomes easier to resolve problems or issues. As such, a policy is a general response to a particular problem or situation. Next subcategory of standing plan is procedure. Procedure are routine steps on how to carry out activities. They detail the exact manner in which work is to be performed. They are specified in the chronological order. For example, there may be procedure for requisition supplies before production. Procedures are specified steps to be followed in a particular circumstances. They are generally meant for insiders, that it means those who are working inside the organizations, to follow. The sequence of steps or actions to be taken are generally to enforce the policy and to attain the predetermined objectives. Next subcategory of single-use plan is method. Now, methods provide the prescribed ways or manner in which a task has to be performed, considering the objectives. This depends on the situation. It deals with the task comprising one step of procedure and specifies how this step is to be performed. The methods may vary from task to task. That is why they are known as single-use plans. Selection of proper method saves time, money, and effort and increases efficiency. From imparting training to employees at various levels, from top management to supervisory, different methods can be adapted. Next subcategory of standing plan is rules. Rules are specific statements that inform what is to be done. They do not allow any flexibility or discretion. This reflects managerial decisions that a certain action must be done or they must not be done. They are generally rigid in nature, and this is the simplest form of plan where there is no change, no compromise unless a policy decision is taken. Even if there is violation of rule, generally there will be a penalty. Rules basically are certain defined state of actions that must be followed in a business organization. Next subcategory of a single-use plan is programs. Programs are detailed statements about a project which outlines the objectives, policies, procedures, rules, tasks, human and physical resources required, and the budget to implement any course of action. Programs will include the entire gist of activities as well as organization's policy and how it will contribute to the overall business plan. For example, construction of a shopping mall, development of a new product are under the program, which is a single-use plan. Lastly, in this chapter, we have budget as a single-use plan. A budget is a statement of expected results expressed in numerical terms. It is a plan which quantifies future facts and figures. For example, a sales budget may forecast the sales of different products in each area for a particular month. There can be cash budget, what amount of cash is coming in, what amount of cash is moving out, purchase budget, production budget, whatever it may be. A budget may also be prepared to show the number of workers required in the factory at the peak production times. Since budget represents all items in numbers, it becomes easier to compare the actual figures with the expected figures. And thus corrective measures or control actions can be taken to correct the deviation from the standard marking.